Imagine earning market returns without staring at charts, analyzing news, or making trading decisions. That's the core idea behind copy trading, and today, we'll break it down clearly and realistically. Welcome to this educational series built to simplify modern investing. In today's episode, we're explaining what copy trading is, how it works, and why it has become one of the fastest-growing investment methods globally. Copy trading allows you to automatically mirror the trades of another account. When the master account buys, your account buys. When they close, your account closes. You don't place trades manually. Execution happens automatically through your broker's platform. Think of it as outsourcing trade execution while keeping ownership of your account. Why it exists? Trading successfully requires analysis, strategy, skill, time, discipline, emotional control. Most people have capital but not the time or expertise. Copy trading bridges this gap. Professionals or algorithms trade, while investors mirror their actions automatically, shifting participation from active trading to passive investing. How it works in practice? Here's how it works in simple steps. A trader or algorithm runs a strategy. Their broker distributes those trades through a copy system. Your account executes identical trades in proportional size. Your results mirror theirs, scaled to your capital. You still control when to stop, how much to risk, and who to follow. You are not handing away your money, you are linking execution. Why people choose it? People choose copy trading because it saves time, removes emotional decision-making, allows participation without expertise, and provides diversification. Risks and misunderstandings. But this doesn't mean copy trading is risk-free. Returns vary. High-risk strategies exist. Past performance does not guarantee future results. Providers differ in skill. Success depends on choosing the right provider and maintaining realistic expectations. What makes a good provider? It begins with verified results, ideally connected to a broker or audited feed. Strong providers also show risk management, stable execution patterns, transparency, and consistency over time. Good copy trading isn't driven by hype or promises. It's rooted in structure, discipline, and data. Some of the most reliable providers rely on systems, not emotions. This is where our work aligns. At KiwiFX Innovations, we develop systematic trading models designed to operate without emotional decision-making and investors. Choose to mirror these models through regulated platforms. Our goal is to make algorithmic trading accessible for passive investors. If you enjoyed this breakdown, subscribe for our channel where we will explain important things related to trading. Thanks for watching, and remember, smart investing begins with understanding how technology works for you, not against you.